Welcome everyone to my first video on this YouTube channel. And in this video, we will break down what is the stock market. Stock markets have been a huge buzzword in the past few years, especially since 2020, because, you know, ever since the COVID has started, the stock markets have become a huge buzzword and everyone's talking about it. So, let's break down what is the stock market. Stock market, as you can see that the name itself contains the word market, and this is a market for buying and selling stocks. Now what are stocks? Stocks are the equity shares of a company. So let's say that we have a company A. Okay, this is a company. So you know that every company has its equity shares, right, which represents the ownership of the company, the stake of the company. Suppose this company A has two two owners. Suppose this has a person P1 as its owner, and also it has P2 as its equal owner. And let's say that they both own equally. They both own the company equally. So what can we say? That P1 has 50% equity of the company and P2 has 50% equity of the company, right? Now, one point to be noted is that the company can be of two types, right? The company can either be private or the company can be public. Now, the basic difference here the the basic difference here would be that in the stock market we can only trade the publicly traded companies. The privately traded companies, they are not listed on the stock market. What do I say when I say like what do I mean when I say that the companies are not listed? That means that the shares are not available to the retail people or to the mass audience who wants to trade on the stock market. So these shares, the private shares, won't be available to us to, buy and sell. But they are surely available to the investors and the private equity people. But in the stock market, as a retailer, especially, we can only trade the publicly traded companies. So it is the company's choice whether to go public or stay private. And suppose if a company wants to go public, they have to file an IPO. What is an IPO? It is an initial public offering. So I will break down IPO further, but for now, in a nutshell, o- any company which is private and wants to go public, if it wants to be listed on the stock markets, if it wants to make its shares available for everyone to trade on the market, it has to go through this procedure and file an IPO. And after that, some of the shares are allotted to the bidders. And when it gets listed, people can trade it. But in a nutshell, what this means is that for a company to go private, for a company to go public from private, the companies have to file an IPO, which is initial public offering. All right. Now, one common question which you guys might be thinking right now is that, okay, I know that the stock market consists of shares which we can buy and sell. But how can I buy? Like, do I have to go there, or like, where do I go? I mean, how do I access these shares, right? So, let me first of all explain to you the concept of exchanges or stock exchanges, as we call it. So, exchanges are the places where these stocks are available to buy and sell. So, if you want to buy or sell a stock, you have to do it in an exchange, because these shares of, let's say, some company XYZ, are always listed on that exchange. Whenever I say listed on an exchange, I mean that those shares are available for buying and selling on that exchange. So think of exchange as a place where you can buy and sell the stocks. Okay. So a place where you can buy or sell stocks. Now, okay, before I move on, let me give some examples of a few exchanges. So, in the context of the Indian markets, the exchanges can be NSE, which is the National Stock Exchange, the BSE, which is the Bombay Stock Exchange, and also we have more exchanges such as the Kolkata Stock Exchange, etc. So these are a few examples of the exchanges which exist in the Indian market. Now, you might be asking, okay, fine. Now, I know the basic idea that what stock market is, and I know that I can buy and sell shares from exchanges, but how do I sort of do this? Like, what is the exact procedure? Do I have to go to the exchange? Do I have to sort of mail them or call them or message them? I mean, what do I do? Right? Okay. You you don't have to do any of that. Now, let's move on to the process of how you can do this exactly. So now here's where the brokers come into the picture. Brokers are the middle entity which helps you to buy and sell stocks. All right. So let's say that this is you, and you say that you want to buy the XYZ stock. You want XYZ stock in your account. So what you would do is, this is a broker, this is your broker. So you would first of all open an account in your broker, which is called as the demat account. Okay. You will open an account in your broker, which is called as the demat account. So now you have an account. So now you say to your broker that, hey, I want XYZ stock right now. So what the broker will do is that first, of course, it will check if you have sufficient funds to buy that stock. If yes, then what it will do is that it will contact the exchange. The broker will contact the exchange for you. And here is your XYZ stock existing on the exchange. So the broker will say, hey, I want XYZ for my client. The exchange will give you this XYZ, and the broker will tell you that, hey, you got XYZ stock. And where does the stock go? Stock resides in your demat account, which you have opened in your broker. Okay. So this is how basically you can buy or sell a stock. Suppose you want to now sell a stock, you will again say to your broker that, hey, I want to sell a stock, I want to sell XYZ. So your broker will go to the exchange, and of course it will check that do you own that stock or not. So if yes, yeah, like, okay, you can also sell it without owning. That is the concept of short selling, which we will break further. But for now, let's say that you own one XYZ stock and you intend to sell that. So your broker will see that, hey, do you own this one XYZ stock? If yes, then it will go to the exchange and it will sell that stock for you. All right. So that is the process. And of course, after selling, you get your initial investment back with profits or loss. Okay. So this is the basic idea of how you can buy and sell a stock. All right. Now we know how, like, the basic functioning is about buying and selling of a stock, and we know what the stock market basically is about. Now, you know that there are a lot of publicly traded companies. S- talk in the context of Indian markets. So there are a lot of companies which are listed in the Indian markets. I mean, I don't know the exact number, but I'm sure it's above 5, 6, 7,000 companies. Now, these companies are categorized into three categories broadly. First is large cap, second is medium cap, third is small cap. Now, what is this word cap? What is this? What is this? What is this? This is actually capitalization. Capitalization. All right. What is a market capitalization? So we have a term called as the market capitalization, which is equal to the total number of shares of a company total times the current price of one stock. Okay. So this is market capitalization. So based on this, the companies which have a number above a threshold are large cap companies. The companies which have this number in a specified range, which is below the large cap barrier and above the small cap barrier. Those are the medium cap, and the remaining companies are small cap. There is also a fourth section, which is micro cap, which is again the companies with a market capitalization below another number. So you can categorize them into micro cap. These are extremely small companies. These are basically penny stocks, and generally it's advised not to see them because they are generally very very trappy and very very fishy. Anyways, let's move on. So now I want to talk about the concept of indexes. What are indexes? So you know that in the stock market we have a lot of companies listed, right? Now, you have often heard people say that right now the market is strong. So, how do they say that? Because, okay, you just know that there are tons and tons of stocks just listed on the market. But how do you say that the overall stock market is moving strong? Because, like, how do you evaluate it? Do you look at every stock? Do you see that if more than 50% of the stocks are increasing, so can you then say that the stock market is strong? No, you don't do any of that. We have some indexes which showcase the strength of the market, and on the basis of the performance of these indexes we say that the stock markets are moving strong, or are they weak, or are they neutral, etc. So that is what an index basically tells us. So in the context of Indian markets, we have a few indexes. I mean, we have a lot, but I will just talk about a few of them. One is Nifty 50. We have the Sensex. We have Bank Nifty. We have Fin Nifty. We also have Nifty Mid Cap. We also have Nifty Small Cap. And the list goes on. Like from some of the names you can figure out that what strength it showcases. Like when I talk about Nifty mid cap, it showcases the strength of the mid cap stocks. When I talk about Nifty small cap, it showcases the strength of the small cap stocks. Okay, let's break down Nifty 50. Nifty 50 is the combination of the top 50 stocks listed in the market. This combines the top 50 stocks, and this gives a number which is telling about how these top 50 stocks are doing. And if you know that the top 50 stocks are doing well, you can say that the markets are doing well. Okay, so the Nifty 50 index takes into account the top 50 stocks. It takes all those stocks as an input and it outputs a number which represents the overall performance. So let's say that I say that today Nifty 50 is up by 1%. So I can say that these 50 stocks have contributed to the increment of Nifty by 1%, and the overall market in general, I can say that is up by 1%. Now, please note that if I'm saying that the Nifty 50 is up by 1%, I don't mean that every stock in that Nifty 50 is up by 1%. Some can be down and some can be up. So it takes into account the average movement of all those stocks and it outputs the numbers. All right. Similarly, Sensex is also the combination of a few top stocks in the Indian stock market. Bank Nifty is the combination of the top banking stocks. Fin Nifty is the combination of the top financial stocks, and Nifty Mid Cap is the combination of the top mid cap stocks, and similarly, Nifty Small Cap is the combination of the top small cap stocks. All right. So this is the concept of indexes. Now you might have heard Dow Jones, NYSE, um, like you might have heard all of these terms. Like Dow Jones is generally represented with DJI, and so I hope now you can sort of explain that what these are. Dow Jones is an index, and NYSE, this is a stock exchange, New York Stock Exchange. So if I talk about the US markets, we have various stock exchanges like the NYSE, and if I talk about the indexes, there are various indexes also like the Dow Jones, like the S&P 500, like the Nasdaq, EQ, etc. So these are all generally the representations of some stocks, of some common stocks. Like from the name of S&P 500, you can see that it is a combination of 500 stocks. So I hope now you get the difference between what an index is and what an exchange is, and I hope you understood what brokers are, and also what a demat account is, and how you can buy and sell shares in the market. I hope that is clear. Now, one more thing which I wanted to explain is what all can you do in the stock market. So you can, of course, you know that you can buy and sell shares, of course, but uh, it depends on the time frame which you're considering. So you can either be an investor or a trader. Investor is generally someone who buys a stock, like he or she has analyzed the stock pretty well and has done a lot of reading about the stock and wants to buy a stock. So the investor will keep the stock with himself or herself for a long time, suppose 3, 4, 5, 10 years, so that is an investor. A trader is someone who can buy the stocks and sell the stocks within a short time. Now, traders can also be of two types. It is intraday, one of them is intraday, and the second is swing trading. Intraday trading means that the time frame of buying and selling is just one day. Like you have to buy on the same day and sell on the same day. Swing is more than one day. So it can be like 2, 3, 4, etc. days, or like 1 week, 1 month, or even in some cases 1 year. So it really depends on the time frame. But for an investor, generally it's 3 to 5 years, 10 years, 15 years, etc. So this is the difference between an investor and a trader. I hope that that is clear. So thank you for watching this video, guys. I will be out with the second video of this playlist very soon. Stay tuned, guys. Thank you so much.